we in the UK are in the run-up to a budget, but it's not like the normal run-up to a budget, because you've got a lot of people in financial markets looking at Britain and going, a little bit worried. And it comes back, okay, I'm going to show you a few charts here which just give you the big picture on this, but also the market picture, which, as I say, we don't always spend that much time looking at things like this. This is bond yields, UK government bond yields, and you'll probably remember from the Euro crisis when Greece was in trouble, this was the stat that we tended to look at quite a bit. And it's got bearing on, the public finances as well, because the higher this line is, the more we are all paying in debt interests. It's not that dissimilar when it comes to payments on your mortgages. But here's what's interesting, okay? So the government recently has been banging on about hinting rather, that it might well be raising taxes. It all started actually on the 15th of October. The Chancellor did an interview with my colleague, Sam Coates, kind of suggesting there were going to be tax rises to come. And look at what happened next. After that suggestion, those bond yields started coming down. And actually, they stayed down. Remember, there was that press conference at Downing Street, slightly odd press conference, where she kind of hinted there might well be manifesto pledges that get broken as well, so hinting income tax could be going up. Look at that. Then there was the U-turn. The big U-turn from the government, briefed to the newspapers where they hinted that there were going to be no income tax rises. And look at what happened next. All of a sudden, lo and behold, that goes up. So that's the kind of big market picture. But I want to give you a bit of context behind this roller coaster. And it comes down to two charts, one of which might well be the worst forecasts in the world. This is the forecast from the Office for Budget Responsibility in successive years. So we're going back to this kind of 2008, 2010 here, of what they thought was going to happen to UK productivity. And you can probably see the pattern here. Pretty much every year they said or suggested it was going to go up, and then it didn't. And they say, next year it's going to go up, and then it didn't. And at the moment, if you look at their latest forecast, just from March, they're kind of saying the same thing again. It's going to go up. But they are now embarking on this moment, and we know they are thinking hard about this, about trying to work out whether there might be a problem with this chart. And I think, if we all look at this chart, there's clearly a bit of a problem with it. And the upshot of that is that line might be lower in the future. That's important, because that feeds into everything else. So remember that, and we're going to do the budget chart. And when people talk about budgets, ultimately it really comes back to two bars I'm going to show you here. Spending, this is kind of obvious, isn't it? Spending and receipts. That's all of the spending on different parts of government. So departmental spending, other spending, it's called annually managed expenditure, mostly welfare, and then debt interests. And that showed you that chart at the start. The higher that line is, the bigger that is. And because that line has been quite high recently, we're spending over £100 billion on debt interest. It's more than we spend on schools. Okay, so it's a lot. So you've got the spending, and on the other side, you've got receipts. This is taxes coming in. Income tax and national insurance is the biggest one, then VAT, and the other taxes are smaller. And the key thing for the Chancellor is she has promised to ensure that this bar is higher than this bar by 2029-30, when you adjust for the kind of where we are in the economic cycle. And she's just about met that. She has a £9.9 billion current budget surplus in 2029-30. And you probably remember that, £9.9 billion. That is headroom. So when people talk about headroom, about how much headroom the Chancellor has against her fiscal rules, what they're really talking about is the gap between those two bars. And the gap between those two bars is forecast, or at least was forecast, to be £9.9 billion. But here's the issue. Since then, obviously, a lot has happened. There have been all these government U-turns, for instance, on welfare and winter fuel, and that takes about £6 billion off that. So you're suddenly down from 9.9 to about £4 billion. On top of that, you've got that higher debt interest we were talking about a second ago. That knocks another kind of £4 or £5 billion off this. And all of a sudden, you're down in negative territory. Negative territory. And it's worth just saying, you get from that to that before the OBR has done any of its forecast changes. Because one suspects she might try and blame everything on those forecasts and that terrible chart at the start. Reasonable idea. But a lot of this is self-inflicted, aside from the big picture of, setting yourself the rule that you didn't leave that much headroom against. Anyway, down. She's broken the rules. And on top of that, along comes the OBR and says, oh no, actually that chart wasn't so wise after all. And we're going to downgrade our forecast for productivity. And if you're downgrading your forecast for productivity, then that means less tax revenue. It means, you're just not doing as well And so another £12 billion, potentially, depending on what happens with that forecast change, comes off. And you can see the issue. She's gone from being there to being there. And if she wants to get back to there, then that's £23 billion. And if she wants to get back to £20 billion, which is kind of a sensible thing to do, to have an insurance policy against this so it doesn't happen all over again next time around, then you're talking about £40 billion. And that is why a lot of people have been saying she's going to have to raise income tax, because it is really hard to raise that much money without doing the big ones. And I showed you a moment ago that bar of where the tax receipts are. Income tax is by far and away the biggest when you include national insurance as well. So that's hence that speculation. But here's where things have got interesting in the last just the last week or two. First of all, the OBR. So back to this terrible chart. The OBR might well have changed its mind on this. We don't know for sure. We don't know until they actually kind of release this stuff, obviously. But some economists thought that maybe that line should be more like that. And if it is, that's why you're talking about that bar being quite so low, £15 billion off. But if it so happened they were a bit less pessimistic, so still not quite as rosy as they were before, but a bit less pessimistic, then all of a sudden that bar isn't quite so bad. So all of a sudden, this might be less in the red. That might look a bit more like that. Partly thanks to less bad forecasts, and partly thanks to debt interest being low. And this is the kind of curious thing. Back to exactly just where we started. The higher this bar is, the more you're paying in debt interest in future. And you remember, the Chancellor started talking about tax rises, and then all of a sudden that started going down, raising the question, what is the period, at what point in this chart would the OBR base its numbers on? And it turns out it's that bit there. So they've just confirmed that this is the period that they're going to use to anchor all of their forecasts. And the fact that debt interest was falling in that period is incredibly important, because that means billions of pounds less of debt interest payments in the future, which raises the question, some people have been wondering out loud, was this all just a cunning plan for the Treasury to brief all of this stuff out there, cause that line to fall, and suddenly make things look better for the forecast and mean they don't have to do all those tax rises in the first place? I mean, it would be extraordinary if they managed to pull that off. And I suspect probably it wasn't really a cunning plan. And why do I suspect that? Because, as I said earlier, the bigger moment where she really lent into saying there was going to be tax rises in the future, or hinting about it, that was the 4th of November, so that was well after this period here. If it was a cunning plan, you might have expected that to happen sooner, so they could yank that line down. Anyway, though, worth just saying, this is not normal times. As I said, this is a roller coaster period. And just underlining that, give you an illustration of that, this is showing you how much movement you get in that chart I showed you a moment ago, in your bond yields, ahead of previous budgets. So this is going all the way back to 2010. You just generally don't get that much volatility ahead of the budget. But look at what changed just in the last few years. In the last few budgets, you've had far more volatility. And you can't necessarily blame all of this on Rachel Reeves, because look, the biggest bars by far and away happened just after the mini-budget. But it might well be that we're just living in this other, after mini-budget period, where investors out there are just more nervous about the UK economy. And worth saying, on top of that, you've also got the Bank of England reversing quantitative easing in that point, which is incredibly significant as well. Final chart, I know there's been a lot of them, but final thing, because this is really relevant as well, is to just ask the question, what's this meant for the pound? Because you've probably noticed the pound has been falling a bit recently, and maybe ask yourself the question, has that got something to do with all of this speculation about the budget? Well, maybe, okay? Because this is showing you, just based on what central banks around the world are doing, particularly the Eurozone and the UK, where you might expect the pound to be based on interest rates. And actually, it's been more or less where you would expect it to be up until recently. So when the government just recently did its U-turn on welfare and people started to wonder, are they not able to make the savings that they promised? Look at what happened to the actual pound versus euro rate. It went down, and it went down well beyond where you would expect it to go based on what all those central banks are doing. In other words, this seems to have been a response to government action. People seem to have been selling off the pound based on what the government has been doing. That, again, is unusual. So put that together with the fact that the markets have been in something of a roller coaster recently, which we don't normally see ahead of a budget. And perhaps it's no surprise that this feels like it's one that's surrounded by more turmoil than usual.